Not paying capital gain tax on sale of property. Remember, when you are selling property, there's the capital gain tax, which is a proceed from what you buy and how much you sell and what you bought. So it's a calculation done. For instance, if you bought land for 5 million, and then now after 2-3 years, you're selling it for 7 million. So you do 7 minus 5 and then 2 million. If you had other expenses, this is agency fee, brokerage, legal fee. Of course, you must have documentation. Hello, karibuni sana. This is your cheerleader of dreams. Here we talk about simple, practical ideas on how you can start, grow, and scale your successful business. My name is Dr. Regina Kengori, CEO, RWK Africa, and today we have a very interesting topic that we are talking about. Costly mistakes entrepreneurs make in taxation. So what are those mistakes that entrepreneurs make in taxation that cost them a lot of losses when it comes to tax audits and so many other things? So for your business to be able to scale, I mentioned earlier that the understanding of tax is very, very important. So what are these mistakes? And some of them are very simple. They are mistakes that you can really avoid. Some of them act as triggers. So the moment you understand them, you're already able to really do away with them. So the very first one is lack of proper record keeping. So what we do as entrepreneurs, most entrepreneurs are salespeople. We run about doing our business. We want to grow our business. By the way, by the time you think about taxation, it's 2-3 years later. You actually learning, where do I get my customer? Where do I get my goods? How do I know my profit? So you actually running up and down to grow that business. So at that particular point, you don't even consider doing bookkeeping. You don't have an accounting software. You just know, if I buy this at 500 and I sell it at 600, I make 100. And it is very important to understand that portion because you understand how your business is able to make profits. But during an audit process, remember I mentioned that a company will be audited within 5 years. So if you did not keep your record straight for the past 5 years, now it's become very, very hard to be able to solve such a case. So you find entrepreneurs by the year 3, when the business has taken traction, that is the time you're thinking, oh, can I incorporate an accounting software? Can I do my books properly? But when KRA will come to audit your books, they will be asking even for the time that you commenced your business and you did not have a record. So for us, when we come to help you, we sometimes find on that year that you are able to do your records properly, you can actually get we can actually even solve the case. But for the years that you've not been able to keep your books properly, you lose the case. Some of you and most businesses make losses on their first year of commencement, but you cannot be able to demonstrate that loss. So I always advise, the moment you start a business, it is very important to keep records straight. And what are these records? Get an accounting software. And by the way, as a company, we have one of the best accounting software, My Accurate Books. You can Google and look for it. Get your sales ledger. So I'll mention a few. During another episode, I'll talk about each one of it. So sales ledger, purchases ledger, physical invoices, that is a sales and purchases invoices, receipts, general ledgers to show your expenses, debtors, creditors list, stock sheets, bank statements, M-Pesa statements if you have them, loan statements, director's accounts if you're also having the director, inventory. So also if you're having stocks, salaries and wages, these are payrolls and all that documentation. So documentation is very, very important to have. The next one is mixing your business expenses with your personal expense. So this happens especially when you are starting a business. So because Regina stated that we need records. So when you get a record from a supermarket, when you buy even something, your furniture, your cups in the house, or your shopping, you just bringing it in the business because you are required to have a receipt. So mixing those expenses is not important. It's very dangerous. So segment how you run the business and separate yourself as a director from the business. Another mistake is where the director, you're so intertwined to your business. So you're doing deposits, you're doing withdrawals, you're just the business. So the risk is at the point of audit, you be audited, and you yourself as a director, you'll also be audited. If you do withdrawals, those withdrawals can be termed as money you paid yourself, and you can be charged pay as you earn. If you do deposits, so you're funding the business, you have to explain where are you getting this money from. Are they savings? And you have to demonstrate. Evidence is very important. So evidence is very important. And also how we operate to do those bank statements. Some of you, when you sell a plot, you put that money in that bank statement. And that is an error. So separate that business account from any other activity that you're doing. If you sell a cow at home, or you sell milk or agricultural product, don't bring them in the business bank account. It will always raise queries, especially during audit. So separate yourself, separate other expenses. Very, very important. Errors in tax calculation. That is another error and another mistake where we do errors. And sometimes we say human is to error, but when it comes to taxation, an error can cost you something. For instance, and these are things that you always find. You may find an accountant, and this happens especially on 20th, when we are just doing returns very fast. At least now we have the auto population. But even when you're doing your payroll, instead of doing a receipt was supposed to be 50,000, you add a zero. That's become 500,000, and it creates a VAT charge. And so many errors that we create, even when the auditor is filing something that was supposed to be 100,000, if you just add a zero, is 1,000,000, and it can create a lot of queries. And the moment you go to KRA and say, oh, I made an error, this receipt was supposed to be 100, not 1,000,000. That acts at one of the greatest trigger. They want to even audit all other receipts and make sure that you don't make those errors, or you did not make those errors in the past. So I advise, especially people who are filing in the office, this filing is self-assessment, filed by people who are in their right mind. When you sit down, do it properly. Don't do it on the final day when you're doing it under pressure. And when the auditor is filing, they are also able to do it properly, and they are also able to understand taxation. The other mistake is trusting third parties to handle our tax matters. And this is where I find entrepreneurs, when I ask them, who is doing your taxes? And they tell me my cousin who completed CPA is doing my taxes, or my nephew. You don't even understand what they are doing, yet you have trusted them to do. Even auditors who are qualified, it is very, very important to sit down and see how they are doing it. Some of us don't even understand how you open iTax portal, how you can be able to check the arrears, how you can be able to check the ledger. This is very, very important. I always train as a training that I call understanding iTax. It's very important. As an entrepreneur, understand. You can be able to, it is very user-friendly. You can be able to open it yourself, check, and be able even to query. And especially when you have people who are doing this task and they know that you understand, they do it with a lot of keenness. So I've seen situations where the entrepreneur does not understand even a tax demand was raised, an assessment was done on the portal. They don't even know those facts. By the time KRA is closing their bank account, that is the time they're like, what happened? I did not know this or this. But these were things that were done behind the scene, and there was nobody who was mentioning it to them. The other mistake is errors in tax obligation. And especially this was happening long time ago when we were registering our companies in the cybers. So most of you got VAT obligation, payee obligation because of doing that. At the moment, for you to get those obligations, there's a process of filing, there's a process of application, and they also accept. And sometimes the process is taking a bit longer. I know some of you who have tried to get the VAT obligation, it is taking quite a while. Of course, because by the time they are giving you the obligation, you must be ITIMS registered. You must have the software to do ITIMS. So it is taking much time than before. And for you who have those obligations and you not use them, you can also apply to be deregistered. For those applications, sometimes they take longer. Remember, this is IT. For you to be deregistered is a process. So you have to be patient for it. And of course, as you wait for deregistration, continue doing the new return. If you don't do the new return, the penalty keep piling. So the other, failure to register for tax obligation, pay rental VAT. So you fail, you don't register, you operating a business that is vatable business. You are above 5 million, but you're not registered for VAT. So that is a huge mistake. So register for VAT. Also pay you having staff, and the director of the company is the first employee of the company. So you as a director, during audit, you asked, how do you survive? And you say, I survive from this business. So where is your pay as you earn? So you have to demonstrate that. And an entrepreneur say, I don't pay myself. You cannot lack to pay yourself, yet you're eating, you're drinking from this business, you're paying school fees for your children, it's the business that is funding your expenses. You might not have a salary that you're saying at the end of the day, the month, I'm getting paid 50,000, but occasionally, every week you're removing 5,000 from the business to cater for your personal expenses. So you have to raise a salary and you have to pay as you earn. Rentals, some of us have rental buildings, and KRA is doing a lot of surveillance on our rentals, and I'm very sure you have seen them. Even the revenue service officers who are just moving around our rental areas. One of these time I'm going to talk about rental. And they'll talk about it. So that is a mistake. Apply for those obligations and start doing them. I always say during a tax audit, it is better to have done something than to be at zero. So if you do VAT and you did not even do 100% compliant, but you are somewhere, it's a better position, and then you never even registered. So the other part is lack of tax function in our organization. For the past 2 years, taxation has become a hot debate. You remember the tax bills and so many things, so many tax changes. It is something that you have to create a function. And some of us say, I don't have capacity, I don't have the competence and the capacity to build a tax function within my organization, but you can outsource. So if your business, you're planning especially to scale, I talk about visibility for your business to be out there and for you to get a lot of queries, tax queries. You have to have a lot of turnovers. So if you're planning for growth, plan to have a tax function. You can outsource it. You can even talk to us. You can outsource it. You can do tax planning. We can discuss about how to be tax compliant and make it as one of the goals, one of the strategic goals in our organization, and you push your business to that level. if you don't handle tax consciously, some of us sit down and we say, oh, let's wait and see, let's wait until they knock on our doors. So if you don't handle it consciously, you may find that one day when they knock on that door, for sure, you'll be having a lot of issues that you cannot be able to solve. So the other portion is failure to plan. So tax planning, observing time deadlines. So most of us filed on that particular day, even at night when the system is not even working. And right now we are having auto-population. It is bringing a lot of queries. The auto-population is available on 1st of that month and until 20th. Why don't you just look? And if you feel that there are items there that have been, some of you sales has been added, VAT have been added, why don't you query KRA on 5th, on 6th, on 10th, not start querying KRA on 20th? That is the time you wake up and do auto-population and you find, oh, they're giving me errors. Then you not get help at that particular point. So tax planning is also very important. This is where you incorporate doing your returns on time. Also, if you're supposed to do installment tax, this is a point where we consider installment tax, we consider the other monthly returns, and we make sure that we do them properly and observing the deadlines. Lack of control procedures, internal controls. I don't know how many of us do internal controls, entrepreneurs. And this is where we fail. And especially where we are in this hard economic time, challenging time. And I'll be talking to CEOs on how to navigate tax complexity and while staying profitable. So one of the things that I recommend is internal audit. Well, because entrepreneurs, we are geared on selling. We're just looking at our customers. Where do we get materials? Where do we sell? That is the biggest portion of our concentration. But do we go back and look at our managerial level? Do we look at our processes and our internal controls? And this is where you find that you have so many errors and so many issues that are happening within the organization that is even making you lose more. So what do I mean? So your processes, how are you selling? Who are your customers? Are you having issues around controls? Some of you, when I visit your organization, I find accountant who is the core of the business. They are doing invoicing, they do creation of the customer, they do invoicing, they get payments, they put it on the system, they check the banks. There's no controls such that someone can even create a customer, the items can be sold, no payment received, but payment can be effected on the system, bank reconciliation can be, most of you don't even do bank reconciliation. Even somebody, if they pay via M-Pesa and they cancel, you can't even tell. Some organization, you even find that bank checks bounced, yet nobody noticed. So how do you do processes and internal controls within the organization that can help you? Especially if you are suffering cash flow issues, it is time to do internal controls. And that is something that we be able to do very, very well. Look at your debtors. Some of us, when we do audit, we see debtors, your debtor, and when we are doing audit for statutory audit, I always prepare a management report that I explain all the observation and the risk areas in your business. And it is very, very important to look at the risk areas and internal control. And I do a lot of observation. I'll observe and say, your debtors, it is at 70 million. And when I look at your debtors report, this is your balance. It has provided the debtors. I'll look at the list. I'll do the sampling and determining. I'll also look for comparative year. So we are talking about year 2024. I'll look for the comparative year, that is 2023, and find How much was your debtors? If your debtors was still there, 50 or 70 million, I'd want to see, is that debtor the same as today? So some organization, I find the list that I was provided in January of all the debtors, when I compare for this year, I find totally new debtors. And I go back and I say, let me see if they actually paid. You find these people, they are still pending on that system. So there are so many errors, and this is even where internal controls issues come in. This is where you find even customers talking to the accountant in the office. The debts that is there is 100,000. Give me 20,000, then we do away with the debt. So there's a lot of issues happening. And us as an entrepreneur, because you want to see item being sold, customers being created, you're not conscious of what is happening in the background. Let's talk about stocks. How many of us do stocks on a daily basis? If you're having a business that is stock, has a lot of stock is cash flow. So when I come to your organization and you tell me your stock is worth 10 million, and I ask, give me your last physical count, you tell me that I counted last 6 months, then and there's a problem. You have to incorporate systems to monitor that stock. Are you doing physical stock counts? Have you arranged your item in such a way that when people are doing stock, they can even do it within 30 minutes? Do you have a stock and inventory management software? Can you be able to compare the physical stock and the stock, the stock from your system? And can you be able to explain variances? If you're holding stock and you cannot be able to explain all that part, then there's something that is not adding up. And entrepreneurs, when I ask questions about that, you know what you give me? That the person, the storekeeper, is my sister. The storekeeper is my cousin. As in, the relationship is a trust, is not the system. So if you want to scale your business, you have to put systems that are working, irregardless of the person who is there, whether you trust them or you don't. The system has to work. So that is something that the processes that you're using, the system, how you order. Some of our organizations, they don't even lose on stock. They don't lose on how they receive money. They lose on ordering. So you have people who order items that don't come in the organization. So your stocks come halfway. It also comes with a lot of there's always issues. So as an organization, you have to be able to monitor all those areas. And as auditors, some of us, because we are always in the business, we don't understand what goes on. Or when you're in a familiar state, you cannot get an extra eye to be able to understand if there are issues. So that's where we come in. We give you that extra eye to just analyze your organization and your business and tell you the areas of improvement. So that is internal. If I train about one of these days, I'm going to train you about internal audits. And I'm very sure it's a training that you'd want to really understand. So the other mistake that we do is filing a return where we have business income or operations. So some of us are waiting until June 30th and we do a new return because if you are late and you say you did not have operations, yet you've been operating for 3-4 years. But just because there is no query, there is nothing, you just file a new return one time. That new return will become something else. So just make sure that if you have a operational business, just make sure that you don't do the new return. You can be able to do a business income and be able to file very properly. So something also that we were doing before, I don't know if we are still doing it, especially entrepreneurs, who, because in our culture, our business culture has a lot of bargaining. We bargain a lot, by the way. So when someone is selling you something, they're like, I put VAT, and then you start bargaining and say, no, don't put VAT, I don't need this. So you negotiate a discount because you don't want VAT receipt. That is very dangerous. So that bargain is not, sometimes do your calculation very well. Sometimes it's not worth it. Not paying capital gain tax on sale of property. Remember, when you are selling property, there's the capital gain tax, which is a proceed from what you buy and how much you sell and what you bought. So it's a calculation done. For instance, if you bought land for 5 million, and then now after 2-3 years, you're selling it for 7 million. So you do 7 minus 5 and then 2 million. If you had other expenses, this is agency fee, brokerage, legal fee. Of course, you must have documentation. That is very key. So don't impose those charges and you don't have documentation. What other documents should you have? A sales agreement is very, very important. A bank statement to just show the entry of the money. And what I've seen in the recent past is that when you do the capital gain tax on iTax, you just find like after a year, KRA will query to ask you for those documentation. If you've been asked to provide the documentation for that, that is something normal. You know, some of us, when we get those queries from KRA, we start thinking, who is looking after my business? Who want to bring my business down? No, some of these queries, they're just normal. So treat them, and if you have the right documentation, you can just handle them as simple, so simply, and you can just close. The other mistake that we do is the combination of multiple sources of income. So you have in business income, you have rental income, you have interest income. Remember the iTax portal, when you register in your business income, it has all those portions. So you may find that when you combine your rental business and your business, when you combine them, you find one business, the rental is a profit, the other business you're doing is a loss. But when you combine them, they become a loss. So during audit, you'll be required to put them separately. So I always advocate that you separate them. What about if you're having a business that you have combined, you know, those business that we say group of companies, where you're having a shop, you're having a petrol station, you're having a gym, a hotel, and all of them are operating under one PIN, is still okay. So that is an entire business. So for me, when I handle that audit, for you, when I'm providing a management report, I have to show how your business is making profit, because that is one of the key elements for audit. It's for you to understand the financial position of your business. First of all, it's not even to file for tax. It's understand your business and how much profit you're making. What are the observations? What are the errors? What are the internal controls you need to change? That is very key. So for such a business, I'll come and do petrol station separate and see the incomes. I look at the hotel and look at the profits and the challenges it's having, the shop that you're having, the quick shop that you're having, the gym, the car wash, everything separated. Then we come and combine the whole business. It is very important. Sometimes you may find that even one business is making a lot of losses. It is having a lot of internal controls, and you can just rent out that space instead of you doing the business. So such decisions you can be able to decide because you have the correct information with you. The other one that is a mistake, and now we are getting to the part where we need a lot of understanding, is the difference between your pay declared on a monthly return and the salaries declared at the end of the year. So remember, pay as you earn, we do on a monthly basis. So for 12 months, we have declared that our basic salary is 2 million. But at the end of the year, the auditor filed as 3 million. So that is a trigger. So this 3 million, what was included there that was not on your pay that we were doing on a monthly basis? So if there is a difference, it has to be charged on pay. If the difference was cash, was that he combined wages, and then it also acts as a trigger. So for me, when I'm doing audit, I have to separate and declare other wages. And of course, wages is a trigger. You have to have correct documentation for wages. So especially organizations that have a lot of casuals, this is construction, farming that has a lot of people that you're employing and paying them on a weekly basis, keep your documentation properly. So what are these documentation? Have a sheet where they sign name, ID, phone number, let them sign there. So for other organizations that you are just having casuals who come in once a while, let them sign a petty cash voucher. So the other portion that I would want to mention, the other mistake that I also want to mention, is the other portion is where the VAT return is different from the sale, or your turnover from the VAT return is different from your income tax return, both sales and your purchases. So remember, when it comes to doing the audit report, it is reflecting what you've been doing on a monthly basis. So that sale that you have declared for 12 months should form the audit report. So if this 12 months gives us 10 million, but the audit reports gives us 15 million, that is one of the biggest mistake. And actually that is outlier. KRA will pick the higher, either charge VAT or charge corporation tax. So that is one of the biggest. Actually, if you don't have the correct auditor, that is one of the biggest mistake that entrepreneurs make. And especially us, that we don't check our accounts because we say we don't understand. And we let the auditors and the other third parties file on our behalf. It is very, very dangerous. Sometimes you don't even provide documentation. And you find the auditor or the person who is filing that return included something like wages, something like rent, and possibly you're living in your own space. So during a KRA audit, they will tell you, give us this rent receipt. And that is the time you just say, oh, I don't have rent. But because you did not check what was provided, you did not know what was happening. The final part that I would mention is lack of understanding of emerging issues in taxation. And we talk about tax so many times. We have webinars that we train about taxation. Very important for you to come and learn. The moment you learn, you are able to understand. And the moment you understand, you are able to make correct decisions. The final portion is lack of understanding of audit triggers. You can go to our past video and understand what some of these tax triggers. Possibly I can just mention a few. Non-filing is one of the biggest triggers. When you paid through IFMIS by the government and you did not declare, continuous losses by a company. You're 5 years in operation and you're just on a loss. That's a trigger. You're just on a loss. Even us who do VAT and you're always on a credit position. If you're always on a credit, then there's you're zero-rated or you're doing a loss-making business. So KRA would want to raise a query and ask. So industrial trends versus specific company profits. So if your profits are very low, KRA can be able to compare with the industry. If you're in the real estate industry and you're making low profits, they can be able to compare and be able to check. Another trigger is business restructuring. So if you have multiple businesses and you want to bring these businesses together, mostly for control, for tax compliance, and you want all of them to now operate under one PIN, you can do that. But the moment you see closure of these PINs, it becomes as a trigger. So VAT, custom refunds, excise refunds. So if you're asking KRA to refund you, and of course they refund taxes, especially for exporters, for zero-rated. they refund. If you do refund application, you're always audited. Third-party information, someone might give out information about your organization. This information is information from your suppliers, from your customers, or from people who understand your business, and they can give information that you're not tax compliant. It can act as a trigger. Media attention. So media attention, this is where possibly you can either get a positive attention or a negative. Possibly a positive, get an award, mid-size, and that create that space where possibly KRA would want to know more about you. Negative, possibly you get to these scandals among them and you want also to be audited. Intercompany transaction, if you're having sister companies, when one is audited, most likely the other that will be audited. So sister companies is where you're trading with one another. So one is a creditor or the other one is a debtor. Sometimes you find that one is making profit, the other one is making losses, and that. So also the final portion is lack of understanding of action to take during audit. So we have learned about audit. About audit. So you can go to that video and look at it. But when you get that call, when you get that letter from KRA, always answer on time. If you've been given 14 days, answer within those 14 days. If you don't have records within those days, you can always write an email request for more days. Evaluate the information they are looking for and prepare that documentation. I always advise to do a pre-audit compliance check. Just do a pre-audit. Call a tax advisor like us and just do a compliance check. See what are the areas that have issues and see a way of being able to get more documentation, more evidence, so that you can prepare properly and have the correct tax advisor during that process. So what are some of the mistakes that you do during audits? Panic. Some of us, when we just hear KRA, we just panic. And we don't sleep at night. If you don't want to hear about KRA, then you don't want to do business. So for entrepreneurs who don't want that disturbance, I guess, I don't know what to say. Especially if you get, and there are businesses that are very, very prime for audits. So they're there and you can avoid them if you don't want. But you have to. So panic is something. And when we panic, we call, we go. Some of us go in anger. When we get those calls, we answer them in anger. And it is very dangerous because we don't appear cooperative. And when we don't appear cooperative, some things might go to the wrong side. Not consulting a tax advisor, one of the huge mistakes. Some of these things, they really require a lot of representation so that you're represented in the correct manner. Assuming the letter of audit, they keep sending emails and you read them. You say we are under pressure, we are handling other things. You don't even say something. You don't even pick those calls. That is very dangerous. One of these days, you're going to get a demand, and the next point they are going to demand, and the next one they are going to assess on the iTax portal, and they are going to close your bank account. So the moment you don't respond, there's always the next step being taken. So don't wait until that point. Not conducting a tax risk assessment before audit. I always mention, be prior to any documentation provided. Sit down and ask yourself, what are they looking for? What are the issues that we are having? Be practical, be open, handle those issues, because if you don't handle them, at that particular point, you'll not be having time to even handle. So with that, I think you've really learned a lot, and I really thank you for being part of this. And let's see you on the next episode. God bless you.